Welcome back, everyone, to Stocklabs market recaps. And believe it or not, we are already through with April. So we finished up on the 28th. It was kind of a bit of an action packed week. The NASDAQ was actually at month to date lows on Tuesday, at Tuesday close. And then we got, I think it was Microsoft and Google reported earnings first, and then Meta was on Wednesday, and Amazon was on Thursday, I believe, or something like that. Meta, it was first Google and Microsoft, and then Meta and Amazon later, or whatever. But we got a big ramp Wednesday, and then kind of that followed through uh, Thursday, Friday as well. I mean, the earnings from Amazon were a little bit disappointing. Market was like a little bit disappointed in Amazon, but by then the Nasdaq itself just had a little bit too much momentum for any downside to really materialize. So we end up closing at month to date and year to date highs in the span of about 3 days from month to date lows. So that was pretty devastating for bears. For the week, Nasdaq was up 1.8%. S&P was up 85 basis points. The Dow was up 0.8, and IWM was a big laggard, down 1.3%. So no participation from small caps. Gold moved up slightly, and crude oil. What did crude oil do? Down 1%. Kind of a flattish week. So the story was the Nasdaq this week. Basically, big whipsaw from month to date lows to year to date highs in just a couple days on the backs of the big tech earnings. If we look at those big tech companies themselves, how they did, we've got Meta up 13% for the week, 240. They were buying 225, 230, 250 strike calls ahead of the print. Stock was trading, I don't know, somewhere in the 205 to 210 range into the number, I think. So a lot of bullish positioning there that paid off. Microsoft also, a lot of midsummer calls were getting bought here. Ahead of the print, May 315s or something, those should be up a decent amount from where this was trading before. Apple up 3%, not a bad week for them. Nvidia, same thing, up 2%. Google kind of in line with the Nasdaq overall. I mean, the earnings were okay or whatever, but there wasn't as big of a reaction as some of the other ones to Google. Netflix up 0.6, and then down again was Tesla, and Amazon finished the week down actually after, I think it initially pumped after hours on earnings, but ended up giving it all up and really didn't do much on Friday after reporting Thursday evening. So that's it for those ones. And if we look at our breadth for industries, you can see that the breadth overall for the week was lacking. So we already highlighted the NASDAQ and how those big stocks were the ones that were kind of blasting off and pulling the indices higher. But the market, stocks overall were generally down. Basic materials down 0.6, consumer down 50 basis points, financials flat, healthcare down 2.25, tech down 1.8. So the median tech stock was down 1.8% when the Nasdaq was up 1.8%. So 360 basis points of sort of underperformance from the median tech stock. Utilities down 1%. Services down 0.8. Industrials down 45 basis points. So really, all industries were sort of getting sold, and tech was this kind of the second worst, despite the strength in the Nasdaq, which is a little bit concerning. As far as sectors that were up, not a whole lot. Toys and games, something was here. Probably there was. This is a small component, small sub sector that maybe had something report good earnings, but yeah, for the most part, there's not a lot here on the upside. On the downside, it's also not, tremendously. There's not like severe downside here. I mean, some of these are down 5%. Okay, whatever, LEDs, drugs, some software type stuff. This is not really that encouraging. Down 5% on a week that the Nasdaq was up big is not great. Solar also not far behind. Down 4.8%. Yeah, really the breadth on this page was not looking good for the market this week. If we look at breadth by market cap, we've got 1 to 5 billion. Okay, let me get rid of this one. 1 to 5 billion. Okay, up 38 basis points. Okay. What am I doing? 5 to 10 billion, down 19 basis points. 10 to 50 billion, down 26. 50 to 100 billion, up 5 basis points, basically flat. And 100 billion plus, down 1 basis point, basically flat. But you can see, like, even on the giant capped stocks, they didn't go anywhere this week on the whole, even though indices made some decent moves to the upside. So, but to see a look at what intelligence says for this coming week. Okay, JNUG, gold miners bullish, short QQQ, bullish high beta. So this maybe will help out the Russell. Biotech bullish, banks bullish, inverse natural gas bullish, momentum tech. Okay, this is kind of interesting. This would be like a lot of SaaS stuff and I think ARC type stocks and things like that would fit under a sort of momentum tech theme. Oil and gas bullish. Like I said, ARC bullish here. Brazil and short treasuries. So yeah, it's kind of hard to say from here. Let's look at the opposite end of the spectrum here. Okay, we've got short China, short mid caps, bearish internet bear. So bullish Dow internet, bearish VIX, bearish EM. This EM is heavily weighted towards China, so kind of makes sense that yin and EDC would have the same evaluation. Short Russell is bearish, so bullish Russell and bearish VIX and bearish the dry bulk shipping index. Just ignore that. IPO ETF bearish. Oil is bearish. I'm just gonna ignore the rest of these. They're like couple commodity things. Oh, we've got this. Oh, internet bull is bearish, and so is internet bear. It's kind of funny. So maybe that's not going to go much of anywhere. Yeah, I would say just from the general appearance of these intelligence results that Most likely, we're going to be seeing some downside in the market in early May. Um, the ramp the last few days of April is not just like that's more of like a calendar quirk type thing. It's the end of the month. There were some, even the big tech earnings were not huge, really impressive, but they weren't bad enough to justify downside. So market went up and, people got squeezed. So I would expect downside early in May. Maybe that will materialize into sort of the sell in May trend that, is kind of an adage, but May overall tends to be kind of bullish, right? I mean, not not bullish, but not bearish either. But the idea is you sell in May ahead of kind of this weaker span of time. So yeah, I think early in the month you're going to see downside, especially just retesting the ramp that took place right at the end of April. Most of April was soft in general. Market was not getting any traction, so I would look for some behavior like that to reemerge sooner rather than later. So yeah, we'll see. Summer trading is basically here, so nothing's going to get too crazy probably, but you can be on the lookout to sort of get better opportunities than just aping in, after a big ramp. So that's all from me. Have fun out there and talk to you later. Bye.